is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom. Good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock. You and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Hi, folks. Basil Chapman sitting for Tom O'Brien. I do the 10 o'clock Tiger Financial News Network's morning. This is Tommy O'Brien does the morning market update. And I come in with the Tiger Technicians Hour at 10 o'clock. So 9 o'clock we start. 10 o'clock I come in. My service here is the opening call daily newsletter. And let me just go through the market right now. Dow's up 187. It got repelled at that inside track repellent zone. Remember these two dashed line, these two diagonal lines. I call them inside track propellant zone, and very often price goes into it and then pulls back, and eventually you want to see it break out, or on the upside it breaks down and then you want to see it break upside. So what we're looking at here is the same thing in the weekly chart, and that just tells me we've got a lot of resistance up in the 40 for the Dow, 47,000 area. Certainly 46,800 to 900 is going to be some kind of resistance that we're going to monitor closely. If the Dow goes above 47,300 in October, anytime in October, that is very impressive. I think it's stuck in a range. So stuck in a range. I think it's easiest if I talk to you in terms of the market, just in terms of my opening call, daily newsletter, in terms of our positions. We are still long. The Dow, we are long from the April low, three times long position that's left. But in the meantime, we have trading positions. And I felt yesterday it was important to see some kind of break to the upside. But we did buy a 2 times short position this morning because I think that there is upside resistance. And I think we're looking at a multiple market moving sectors here. So I'm looking at it, I'm saying that this is going to be a very interesting market because the Dow has been struggling a little bit. Yes, it popped to a new all-time high, had 3 fantastic winners the other day, but at the same time did pull back. But I'm looking at this rotation through the different sectors, and I think there are different economies as well. I'll get to that in a moment. So we are very short-term, short with a tight stop. We can get taken out. I don't care because the principle of the whole thing is for our what I call portfolio. If this market moves higher, I'll get out of that Dow because the positions that we have that were doing fantastically and then had a pretty sharp pullback, same as the gold, just a very sharp pullback, will rally very sharply, and that's exactly what we're seeing today. So that kind of savors us. I'd much prefer to be in the long positions than to try to keep anticipating the short position by going very short and getting out of many positions. Okay, got that covered. So now let's go through. We got the QQQ, which is trading up very nicely today, up 5.51 at 611.01, 613.18 was the high of just 3 sessions ago. Can it take it out? It's looking very much like it wants to take it out, and that'll start a leg D in the monthly chart. I don't know if I've got time for this, but in the Chapman methodology, we always try to identify the lowest low, see if we can get a rising trend, and as soon as the trend is confirmed rising, it goes from a buy signal to a buy mode, and what we're looking for is peak A, peak B, peak C, and peak D. The fourth highest peak is where other things can happen. It can have an instant restart. There was an instant restart. Within 3 bars, it makes a higher high that can go to another series of highs. So what we're looking at here is if this goes higher, above 612.80 to 81, that will start peak A, peak B, and then a C. And I'll in my show tomorrow, the Tiger Traditions Hour, where we do I do things in greater detail based on the Chapman wave methodology. I'll discuss the rectangle, the arch formation, and how we've still got rising highs that can go to a peak D just under, right on, or just above the previous high. So this is still very good action. IWM actually been improving all day. It's at the high of the day, almost 364, 246.97. This is really important. A technique that I have is if prices go down sharply, but the 9 period, that green line holds above the 14, watch out, because when it goes back up, it's like a spring-loaded move. It pushes right up and it can test the left side high or go even higher, which this did. So I'm watching this one very closely. It's doing very nicely right now. Let's go to the semiconductors. Very important. Needed to see them rally today. They were acting quite poorly. Now they're up 715 at 345.79. So this is that rectangle. It's in the upper part of the rectangle, leg E in the all-time highs in the weekly chart, and monthly charts. All of the monthly charts are still looking fantastic. If I have a chance in the final segment of the show, I'll talk about monthly charts if I can get a reminder here. Monthly charts. All right. Next thing I want to look at here is you've got crude oil. Now let's go to gold. So the GDX is up quite sharply. It's up $1.16 at 74.11. It went down to this Chapman wave inside wedge target support line yesterday. It just nicked it, and now it's bouncing up. That's really important because the 9 period moving average crossed negative. So there's a lot of work to be done for the gold, the GDX to push back up again. So we are still long our gold position, taking a lot off. We just got a core position and just want to see where it goes next, whether we add to it or not. If you're looking at silver, silver's also come down sharply and then had a nice rally today. Not as good, but up $1.14 at 48.82. I do want to go to bonds just for a moment. Our bonds are trading down 18-30 seconds. The TLT has gone to a peak D. Remember, we were talking about those peak Ds. It went to a peak D. It's pulling back a little bit, but the arch leaning over in the TBT, which is the inverse, has gone to a low. So rates are going lower. So let me just go to this. I don't want to run out of time. Crude oil, very big move today. So crude oil went right to the 200 period exponential moving average. It stopped dead in its tracks at 62.12. It went to 62.20, just above, but now it's below. If it can close tomorrow anywhere in the 62.78 area, 78 area, that'll be very good action. That could, in fact, start to disturb the market maybe next week, but so far, so good. All right, a couple of things I want to talk about. People had asked about the sectors like Robinhood, HOOD, trading right now up 8.12 at 135.41. That sounds great. Do you know that this came down from 153.86 down to 120.88, and now it's having a really good rally. Is this a start to a move up in these stocks that were so badly hurt? Yes, GE. Look at that. Makes an all-time high, 316.53. Doji, long-legged Doji candle pulls back. I should mention that we are still long, small positions in Robinhood and GE. But look at this move here. Can it get into the 312 area? That'll be important if it can do that next week. But if it fails to do that, it could stall right here. I'll be back in a moment. This is Basil Chapman sitting for Tommy O'Brien. This is the Tom O'Brien Show. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality
is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi, folks. One of the techniques that I use is when you see a long, narrow rectangle formation, it doesn't matter whether it's daily, weekly, this is a 1-minute chart. It can last a lot longer than your patience, and sometimes it just pops a little bit over the upside of the rectangle, that is the boundary on the upside, the horizontal line. And then if it takes out halfway into the rectangle, you've got to be careful because it could certainly take out the bottom. And then what happens, it'll pop back into the rectangle and then make its mind up whether it wants to continue down or higher. But this is the pattern. It just continues for quite a while. So we'll monitor this. Okay, a couple of things. Newmont Mining, thank you, and the Den. Newmont Mining coming out with earnings today. Look, it's been spectacular. I don't know, it'll only be the outlook that they can talk about, because surely the earnings should be really good. Gold's been spectacular. So this is a leg C, Newmont Mining, leg C in the monthly chart, leg G/C, which usually says it can go to a D, but I'm watching it closely. Look at this huge move up, but it's not oversold in the sense that it's way above the green 9-period moving average. Look, it tagged it. So that tagging it means that, all right, and that means it's a little bit like a magnet, so it might have to digest a little bit, but it's still 9 is over the 14. That's fantastic action. And the daily has come very sharply down from the 97. I'll give you the exact number. 98.58 on the 16th has a tumble down to today's of 87.27. I would say that is a pretty steep decline. So I'm suspecting that it'll give some clues to the general market. Thank you for that information. So there are a couple of other things that I would like to do in terms of, let me just do this because I need to see that you are able in the Tiger YouTube to be able to get everything as clearly as possible. I just want to see, it's not available. Oh, all right, something happened. All right, so within the context of the overall market, so I spent a little time yesterday morning and I was discussing the cyclical. There's a difference between cyclical and secular. And we've always considered stocks like the heavy ones, like the aluminums, the steels, the automobiles, the aircrafts, they go in cyclical patterns. And there are some that just go secular, and sometimes those are food stocks. I mean, just look at Coca-Cola. I mean, that is probably, people don't stop having Coke, I guess, but it's more secular move. But what I spent time on is I discussed Alcoa. AA was the symbol. It was down at about 37 something, and it was pulling back a little bit. And I said, I wanted to discuss this for a couple of reasons, but the most important is, where is this and what does it mean in the overall market? Because if this thing can get out of its way and start to push in this pattern in the weekly chart above, right here, above this high that was made back in early 2025 at the 40 point, I think it was 40.52, so 40.62 level back in January of this year, that's going to be important, because if it gets into this ugly candle, that's going to be important. Well, why is it important? Because this is a cyclical that we've been waiting for it to break this downtrend line. Here, this inside track repellent zone in the monthly chart, and it hadn't done it yet. Well, I said to subscribers that, my morning report, my opening call, my Trader's Corner part that says what we're buying, what we're selling, etc., that we wanted to buy it because it looked as if it was holding very well above the 9-period moving average, holding well above the 14. The MACD was good, and it just looked ready for at least a bounce. If it's wrong, and I didn't mention the earnings because that would have been distracting, but the earnings, I thought to myself, if it's not good, well, it will stop us out for a very small loss. But if it holds, that's going to be important for the general market. We need to see this area start to move. Well, we're very fortunate. Earnings came in very good. And actually, it's up 14% right now at 40.70. So we can raise our stop. And the day is young. Anything can happen. It's not that I want you to mention this, not so much because we actually got that was just part of disclosure, but because it's so important, because of General Motors had a really good move a couple of days ago. It's given back just a little bit of it. Look, it went, the earnings report, huge move from the 50s into the 60s. And then what does it do? It stalls, has a slightly higher high yesterday, and then it pops up to 68.48 and is pulling back right now, down 53 cents. But we want to see, this is the area that needs to move. So I'm mentioning this only for the reason that I'm talking about how I'm looking at the market in so many different ways. And some areas seem to be independent of the market. Some people seem to be influenced by how the whole sector's doing. This is the most varied market we've seen in quite some time. So to go with that, if I look at Bitcoin right here, BTC, it's up today. Let me just get that again. BTC, Bitcoin is up 2,660 at 110,605 at a very sharp move under the 200-period moving average. Now, this is going to be key support, 106,090. I should mention there'll be a long high, but from quite a bit lower down. But most importantly, we were prepared that this is going to be in a digestive phase from the 127,240 level, and it still is, and it hasn't broken out until Bitcoin can trade in the 115,500 area. I mean, trade that. Can't just hit it once. It has to be there. This looks to me like a choppy period, and you've got to be looking at it and saying, well, if I was to go long here, I should have a fairly tight stop. If you've got a long position, I'd be looking at this and saying, if it rallies sharply, that's one thing. But if it just pops up intraday, goes to the 114,800 level, let's say, but then starts to close down again, it means you've developed some kind of a rectangle formation, and it's just stuck in that rectangle. I'd be kind of nervous about that. So I just wanted to go through that. Another thing that we're looking at is in terms of the banking area. Look at the XLF. The XLF was acting very poorly and still acting poorly. And we've had Bank of America for quite a long time. Our target was this level right here, was 50.11. And it got there in leg D in the monthly chart, peak D in the weekly chart. And because it broke to, it hasn't broken to, look at this went to 52.85. The all-time high was back on the 23rd of September at 52.99. So I'm watching this carefully because here's a chart that I don't show very often, but this is the chart, the monthly chart, here we go, of the XLF in pink and the SPY 500, S&P 500 in blue. And look how they've coincided with tops and bottoms. And we were watching this so closely because we followed it because of Bank of America. We followed it from the 2020 low all the way. This was a one-to-one, exact one-to-one move right there. But this decline, so let's call this is not Chapman wave peak A, peak B. This is the lightning bolts, A to B, and then B to C, and then you say C to D. And we're looking at A to B, B to C. Well, B to C was exactly the same from D down, and now it's broken to all-time highs. You've got to respect that. That is really important. And there's a look at that April low, and they're moving together. So that's very important. If the XLF, which is starting to stall, and that's what I'm saying, we're looking at, whoops, there's this rectangle. It's going to test. Look how long it's lasted. This is a 1 minute chart. It goes from 230 until where we are right now at 320, almost 330 an hour. 60 bars, and only now is it about to break that support level. Isn't that fascinating? Live from TFNN, Basil Chapman, sitting in for Tommy O'Brien. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
If folks, so you remember we were talking about the narrow, long rectangle that eventually it pulls down and actually it breaks the lower boundary. And we're just about, look at this, it still hasn't broken it. That's amazing. Anyway, we do have Tim Ord on the line. You're all waiting for Tim. And I'm going to say, hi, Tim. How are you?
Good. Thanks for having me on again. And
pleasure.
Actually, my website's www.ord-oracle.com. My email is tim@ord-oracle.com. So yeah, I want to put that in there. So
great, good.
All right. So we want to take a look at the S&Ps here real quick.
Absolutely. Let's fire away.
All right. There's a gap actually right here. Between that, see, today is Thursday, Wednesday, Tuesday, Monday. Monday, the market gapped up. And if you go down and test the gap on lighter volume, that gap will be support. If you test that gap on higher volume, if you go back all the way down there, which it did, that gap does not have support. So now today we're basically breaking yesterday's high, and we got about a half hour to go. We're not going to reach yesterday's volume. We're going to be at least 10% lighter than yesterday. So I'm still thinking we're still going to have a pullback here somewhere. I think we're probably going to find support in that 657 range. So it's not a big decline. We don't have a lot of panic here. I thought at one point we might get down to that 650 to 640 range. Right now, I think we're just going to basically test last week's low, which is in this vicinity, which is at 657. So what I'm saying here is the volume studies are not bullish. They're actually bearish. You're testing a gap on higher volume, that's bearish. You're testing a previous high, which is basically yesterday's high, and that's also bearish. So what the market's holding up here for, I don't know. But also look at sentiment indicators. Actually, let's go to trend here, see where the trend is. Over the last couple of years, I've always been talking about the trend readings in 1.2 or higher on the trend close. That shows panic in the market. Panics are bullish. And here we got the bottom window is a 3-day trend, which is actually close enough. We're at coming in 1.17. That's, in my opinion, bullish enough. It's close enough. And that's a 3-day trend. 2-day trend coming in 1.27. That's also bullish, which is this one right here. That's the 3-day, that's the 2-day. The 5-day trend, which is a little more important because it's a longer period of time, is coming in, looks like about 108 or 106. It's kind of neutral. And the 10-day trend, which is basically 2 weeks of panic, because it's 10 days is obviously 2 weeks, and it's coming in 101. So you really don't have panic. Panic's actually energy for the market. It's the more panic you have in the market, the more energy it has to rally. And
essentially, you're saying the greater the fear, the greater the chances of some kind of a reversal.
Right. Yeah, because you only get panic at bottoms.
Right.
If you don't get panic, you're not getting the bottom. So the market only panics at bottoms. It never panics. Matter of fact, I've seen the market panic in an uptrend. But anyhow, I mark these times with this tan area, the times when the 10-day trend, 5-day trend, which is most important, we're at panic levels, for this period right there, which is basically this low right here, picked out this low back in April, that April low, because the 10-day trend got right smack at 1.1, the 5 days a little bit over 1.2, and so that's the reason why I marked all that shaded area. And so this blue or this light green area, we're not there. So we need panic to get this rally going. And market can go sideways and show panic, but the trend can rise. But we're not even getting that here. Matter of fact, if you look at this last period, the market actually was rising back in the September time frame, and the trend was up, suggesting that rise is going to continue, which it did. So anyhow, we don't have the panic in the Dixon trend. The equity put call ratio readings on a 5-day is coming in at 0.55. Anything 0.55 and lower, predict the market will make a high within the next 5 days. So that the equity put call ratio actually is a sentiment indicator, a little bit different than a trend indicator, but it's just not set up for a rally to continue here. If we had big volume breaking yesterday's high today, that would maybe change my mind, but we're not even having that. So it's nothing real big to the downside, but I still expect a pullback. And I still think our big rally's coming. I thought it might start this month, and it still may, because we got another week to go before the end of the month, and maybe we get to pull back next week, or maybe sooner. I don't know. But this rally right now, you have to have a sign of strength breaking a previous high. And today's volume, we're breaking above yesterday's high, is not showing a sign of strength. So we just don't have the energy to keep going. So not a big pullback. But again, I think we get back to last week's low, and that may set up the bullish situation going forward if we get panic in the ticks and trend. We get some, if everybody's leading bullish here, which according to sentiment indicators they are, because they're buying calls more than they're buying puts, that's just not a good combination. So anyhow, we can take a look at the gold.
Can I just ask you a question? The high that was made on the 17th of October, just 5 sessions ago, where the trend went to 28.99, that was also because of the fear of the regional banks. That's included in the trend reading that you've got now, and that rising trend, the fact that it's pulled back from 28.99 to 17.30, is it like it has to restart to activate again?
No, say that again. We did have a trend here 2 days ago. We had
the VIX index. The VIX index.
The VIX?
Yeah.
Oh, right here?
Yeah, so it went to 28.99 on the 17th of October. Would that not be like a climactic move for the Dow, or at least for the market? Because usually you get that kind of big spike and then the market turns around. In fact, the market's been a little toppy together with the VIX index. So I'm just wondering why that didn't work like it would normally do with a very high VIX index.
Right. VIX is, it's a form of panic. But that was on this day right here. The market actually did bottom. We kind of, fumbled up, but we didn't really have a sign of strength and volume. So I do studies on VIX, but not an expert at it. So.
Okay, so anyway, you know what you've got next. We're waiting for that. We've got a break coming up. This is Basil Chapman sitting in for Tommy O'Brien's The Tom O'Brien Show. I'm speaking with Tim Ord from the Ord Oracle. We'll be right back. Dow's up 188, S&P's up 44.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi folks, Basil Chapman sitting with Tommy O'Brien. We're on with Tim Ward, and Tim was suggesting that there was a kind of a mixed message right here. I think that's what you said, Tim, in the S&P, and that you're expecting a kind of a consolidation to continue. Is that correct?
Yeah, I'm looking for a pullback. It should, because the volume studies are not bullish. The trend studies are not bullish, but it's just a minor pullback, possibly to the last week's low. It may get down to the selling climax low of October 10th, which is just a little bit lower, but I'm still expecting a pullback. I'm surprised they haven't started already, but because the volume studies are, but yeah, I'm looking for a pullback anywhere from 650 range to 655 on the SPY. And if we get panic and ticks and trend on the closes, I'll be long in that vicinity. So nothing, not a major top of any consequence, just a pullback and an uptrend.
Good.
So is that all right? We go. So let's go
chart,
look at the gold market. All right, this is this chart goes back to 2005. It's a bullish percent index for the gold miners index divided by GDX. So it's a ratio. It's a ratio. Bullish percent index measures the point and figure buy signals in the the stocks in the gold miners index. So it's kind of a point and figure buy signal type thing on the gold miners. In slash, I do it over the GDX. So it's a ratio. Then I put an RSI for this ratio, and for some reason it works really well. All these blue lines are times when the RSI of the bullish percent index for the gold miners index slash GDX RSI got below 25. It seems to have to break below 30, but we just got one. We're actually right now this is a 10-period RSI, 2-week RSI, but right now we're at 2237 on the RSI. So that says the GDX is at least a short-term low here. Over the years, it's pretty rare you get about one signal every year. Last time we got a signal looks like about January of 2025, this time right here. Market really zoomed up off of that signal. Sometimes it went sideways for a little bit before the rally kicked in, but all the rallies, it pretty much picked out the short-term low. Is pretty good, and actually most of the rallies lasted 6 months or longer. I don't think this one is, but at least we're at a short-term low here. And there's another indicator that I use. This is GDX, the daily. When I did this chart earlier today, what happened over the last 4 days was a 3-gap play to the downside. What that is actually is a candlestick charting pattern. And you got a gap. Where's my tool at? All right, you get one gap off the top. You got what you call a midpoint gap. Then yesterday the market gapped up and then came back down and actually tried to close the gap. Actually today we did close the gap. Normally you get 3 gaps in a row, the market will go back to its first gap. And that's where we're probably heading, back to the 84 range on the on GDX. And we kind of had an exhaustion move to the downside. We had a bunch of selling climaxes going back to the beginning of October. A selling climax is when volume basically doubles from the previous trading range or previous days trading. If you notice, this volume right here is about double what it was over the last 5-6 days. Same with this one here. This one's pretty much double over the last several days. This is another one doubled from the previous day. Those usually exhaust moves to the downside. So you get selling climaxes that are actually bullish. And here you got a 3-gap play to the downside. And going back to this chart, you got the RSI of the bullish percent index / GDX, RSI getting below -25. So I'm thinking
Can I just ask you, does it make a difference if the selling climax is on the bar before the low, or as long as it's in that region?
Normally,
GDX, because the highest volume was the day before on the 21st, and then 22nd was a little less.
Right.
But it certainly gapped up.
Right. It basically kind of gets you in the vicinity. Normally, I don't know, 90% of the decline's over. You know, it's what it. Well, these two, a lot of times selling climaxes are tested. These two were not. This one here was not. This one here is, well, actually, I guess this one was tested by yesterday. But normally, you get a selling climax, the next day is usually the low. If not next day, a couple of days later, because the market exhausts itself to the downside. Everybody head for the exit door at the same time. Right. So because that kind of dissipates all the selling all at once, especially when the bigger the volume on the selling climax, the more power it has. So if you get a minor one that's just basically double from the previous, double volume compared to the previous days, but if you get a triple or quadruple volume surge, that's actually a stronger signal. Yeah, that's a stronger signal for a bottom. So we got anyhow, we got a bunch of them. Anyhow, we got a selling climax yesterday. Now we're going to try a rally, and this rally will tell pretty much the strength of what's going on. I think we're actually going to pop sideways in this market, where we're going to have basically a support around 70 on, which is basically yesterday's low, and the previous high up around 84 is going to be resistance. I think we're just going to build a trading range in that kind of a sideways market. We'll see if for some reason volume really picks up on this rally going into this first gap back on last week. I'll change my mind, but the volume needs really to pick up here. But volume kind of lackluster to the upside. Then that previous gap up around 84 is going to be resistance, and we'll probably come back down and just build a trading range, I think. But it's not a top of any consequence. Stocks are still going to perform, but it does tell me the ones that had big run-ups to the upside are going to take a rest. And I've been saying that for the last couple of weeks, and I think that rest has started. I'm kind of going down to the second-tier gold stocks, personally, where the monthly charts have turned up, and I'm kind of buying those now. So I think that's what's going to go forward here. We got another chart, kind of looks at the bigger picture. I showed this chart last Tuesday. It's a momentum chart for up-down volume. You get up around 30. We actually hit 32. I don't have the date, but we hit that 3-4 weeks ago. And normally that's initiation off of an uptrend. You get that market that strong to hit, because it's pretty rare. Last time it hit it 2016. Time before that was 2019, and finally we just got it in 2025. So that was 6 years ago. The last one we got. The last one, it went up for another 1 year. The one in 2016 went up for another 5 months. Even though we're hitting consolidation here, we may bounce around a little bit, but ultimately we're going to break up and keep going. So this is not a top of any consequence. It's just a sideways move. But 70 to 84, depends how this volume up to the 84 area. If it's really high, I'll keep it. If not, I'll probably sell my long position GDX and try to attempt to buy it back around 70.
Okay, so I appreciate that. I think everyone appreciates what you give us here. Folks, go to Ord-Oracle. He's got the, just one more time, just tell us your email.
Tim at ord-oracle.com.
Fabulous. So we'll have a great weekend, and we will see you on Tuesday.
Newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, Basil Chapman here, sitting in for Tommy O'Brien. This is the Tom O'Brien Show. Tommy will be back for the 9 o'clock target. This is the morning market kickoff at 9 o'clock tomorrow morning. I just wanted to show you, remember when I started the show, I said there's this long rectangle formation in the 1 minute E-mini, and it can stay in this very narrow rectangle. And I even afterwards, I typed in a long, narrow rectangle can last a lot longer than your patience. And then in brackets, I put before slipping under the support line. Well, it went an hour, more than an hour. It went from 2:30 all the way to where it broke down at 15:36. I mean, let's face it, an hour and something. So what happens is it tries to get out, it goes to the top of the rectangle, and then it pulls back, and then it takes out halfway. That's what I was discussing in the before when I started my show, that if it takes out halfway of the rectangle, be careful because it could go right through the trend line support at the bottom. And then as I was about to be cut off by the commercial, I said it then pops back into the rectangle for a brief second, and then it pulls back sharply. And that's what it's done. And look at the 200-period moving average when you were trading up in the 2:30 to 3 o'clock time frame. Price was way above. You didn't even have to care about it. Now look how important it is. All right, let's get back to just an overview before we wrap up. So let me just do this right here. So for the Dow, we have a core long position from April, near the April lows, but a trading position. We just started almost like insurance based on this particular pattern of the reversal at this inside track reversal line, this pink and green uptrend, narrow channel. And this is the way we are looking at it right now. But we still have our long positions. We wanted to see whether or not some of our positions that we have, some small positions, but some new positions like Robinhood could bounce, and it has bounced. General Electric needed a bounce, and it has bounced. And we're looking at Bitcoin. Can it bounce? I think this has got a tough time coming up. This is Basil Chapman. Check out my opening call daily newsletter. Remember, yesterday we got triple Alcoa. Today it's